All right, so you have to look at telco if you're a telecom analyst, David. It's great to have you here. And by the way, your space has been far from boring. I mean, the changes at AT&T and others, questions about, who's raising price and what that's going to mean, and T-Mobile's competing with Comcast. Maybe it's just me that finds this fascinating, but what do you think are the best bets for investors right now?
Thanks, Kelly. Thanks for having me. Look, we agree. Growth has really had this moment. We've all been whipsawed with the reversal in a lot of the high growth trades. People have kind of soured on the faith in the future of a lot of the tech companies in particular. And so what we've been watching happen is investors have been shifting to value and income as a focus. And there's a couple reasons to do that. Number one, they've been out of favor, so they're under-owned. Number two, there's a lot of value there relative to history. And number three, in a lot of cases, there's a lot of recession resistance in these businesses. Remember, telecom's a subscription-based business. You start the month at 100 and you end the month at 100. In tech, it's a lot tougher. You start at 0 and you have to sell your way into the future. And if the recession hits, it could be a problem for them. So we do like AT&T, T-Mobile as two big stories, I think, into the second half of the year that can withstand recession.
Why do you like those two, but not, why doesn't Verizon become sort of the third, I don't want to say oligopoly type pick, but why not Verizon?
Look, Verizon is absolutely in that mix, but I think that these two stories are interesting because there's a lot of change agents. Let's start with AT&T. AT&T is the 10th highest yielding stock in the S&P 500, even though they cut their dividend related to the Warner Brothers Discovery spinoff. And it's trading an 8 times PE multiple, which is very near its all-time low 7 PE multiple. It trades at a 6 times cash flow multiple, which is almost half where Verizon trades. And there's been a lot of negativity around AT&T and all the kind of changes in their strategy, and they've really simplified the business. There's about 90 stocks that are over $100 billion in market cap in the S&P 500 today. And of those 90, AT&T is 89th in terms of long-only ownership.
Wow.
So we've seen AT&T outperform about 33% year-to-date relative, but that's all been on the heels, we think, of retail money, some hedge funds who are forward-thinking, and we think the long-only money is going to come in as we get more familiar with the new AT&T.
So you basically like the three major carriers. You say also the towers are holding up reasonably well. SBAC and CCI, they're only 10% off their highs. But I think it's interesting, you're not recommending all of the yield plays. Lumen, 8.4% yield. You're saying this stock is a sell because its business is an unrelenting decline.
Look, the management team at Lumen has done a lot of good things to try to arrest the rate of decline. They've invested in people, new services, in increasing their footprint. But the industry in which Lumen operates, which is primarily the business enterprise services sector, is in about a 2% rate of secular decline. CenturyLink, what used to be called CenturyLink, now Lumen, is the second largest player in that business. And so they've been largely a share giver in that marketplace. So we've got the number 3 yielding stock in the S&P 500, and that's why a lot of people are attracted to it. But they're going to sell a lot of their businesses in the second half of this year. They're going to try to pay down some debt. But next year, they're going to spend 100% of all the cash that they make on investments and dividends, and that doesn't leave a lot for debt. And if you take a look at how their debt's been trading, their yields on their bonds have almost doubled year to date. Their debt is on a downgrade watch. So they've got a lot of issues that they need to address. And the thing that would solve all those problems would be cutting the dividend. And that's what we're concerned about.